misunderstanding of the different types of taxes that are levied against your income in the first place. You see, when we pull those tax brackets up on the screen, we're talking about federal income taxes. And there are several other states, I would say most states, that will also take that taxable income, and you'll have to pay state income taxes on those dollars. However, you're also responsible for Social Security and Medicare taxes. And if you're a W 2 employee, that would be 6.2% that you owe in Social Security taxes and an additional 1.45% that you owe in Medicare taxes. So you have your federal income taxes, but you also have the separate taxes that come out of your check if you're a W 2 employee that have to be paid toward those two different programs. Now, if you're a high income earner, not all of your income may be subject to Social Security taxes. So there's a concept called the Social Security wage-based limit. And what that means is if you have someone who, say, earns $500,000, it's 0.2% in Social Security tax on the entire $500,000. They only have to pay that percentage up to the wage-based limit. In 2025, that wage-based limit is $176,100. So they would pay that 6.2% on that first $176,100. And then for any income they earn beyond that, up to their $500,000th in this example, that 6.2% tax would fall off. This is why you see a phenomenon later in the year for high income earners where they'll get like a mini pay bump on their biweekly paychecks. It's because they have already maxed out their Social Security taxes for the year, and that 6.2% drops off and they get more as a result on their end paycheck. Conversely, Medicare taxes work very differently. Not only are Medicare taxes levied against your entire income, there is no cap as to which you no longer have to pay. But if you're a high income earner, you have to pay an additional Medicare tax on top of the original 1.45%. If you're looking on screen, you can see that in 2025, for those who are married filing jointly with income above $250,000, they have to pay a Medicare surcharge tax of an additional 0.9% on income above these levels. If you're married filing separately, it's $125,000. If you're single or head of household or qualifying widower, that's $200,000. So you have people who may not understand that not only is the Medicare tax due and the Social Security tax, most of which is taken out by your employer if you are a W 2 employee. But if you have income above these levels, there's a Medicare surcharge tax that would be due as well that can often catch people unaware. Now, on top of this, if you're an entrepreneur, there's a real kick in the crotch, for lack of a better phraseology. And that is the fact that if you're a W 2 employee, I said 6.2% Social Security tax, and I said 1.45% in terms of the Medicare tax. But the reason it's those rates is because the full tax for Social Security is actually 12.4%, and the full tax for Medicare is 2.9%. But the reason it's halved for employees is because when you work for someone, the employer covers half of those taxes. But if you are an entrepreneur or an independent contractor, you instead are required to pay the full rate. You pay 12.4 and 2.9 as compared to someone who works for someone else who pays 6.2 and 1.45. So if you are a new entrepreneur and you have never had a tax return filed under this business or under this consultancy, or you just started an LLC and you are unaware of the self-employment taxes that are due on this income, an actual doubling of the tax as compared to your employee-employer status, then this is one of the most consistent tax bills that we see catch people unaware, because even if they have the discipline to set aside their federal and state income taxes, which many people don't, they may not be aware of the fact that, oh my goodness, not only am I used to my employer taking out 6.2% and 1.45%, and now I have to do that, I have to add another 6.2 and 1.45 on top of my federal income taxes.